All right. Well, good afternoon, everyone. The bell just sounded. The market is closed. I think we closed pretty close to an all-time new high on the S&P 500 today. So interesting things are afoot. Um, One of the things I want to talk about today is just kind of the routine of trading a set of rules and just going through the mechanics. I want to do share a little trick. Last week we kind of did a little bit of a forecast on a stock, so I want to look at that and see how we did on our forecast. And then one of the stocks that has a buy signal today, in a similar situation to what we've seen the last few weeks, where it's gone up quite a bit. We'll put an order to buy half on that particular stock and then put an order on a pullback. And I'll use a tool that we've never used in this class before that I'm sure many of you are familiar with called the Fibonacci retracement tool. So I'm excited to share that with you today. I want to give a shout out to Barb, who's in the chat helping out, and a lot of great conversation already going on there. Appreciate Scott and Eva and Jay Richardson and Simone and Wacky Whack and Scott Luck and Lawrence and Jay Richardson and everybody else that's here today. Appreciate you taking some time out of your schedule. Will, Kevin, Life in the Fast Lane. Good to see you again. Um, but one of the things that's challenging about trading a rule set is sometimes it's just kind of boring. There's not a lot to do. And sometimes that's good, sometimes that's not very good, especially when the market's making as big a moves up as it has the last few days. So anyway, we're going to go through those mechanics. But before we do that, of course, need to go over our important information. Remind everybody that our webcast today is for informational purposes only. And the stocks we look at are not meant to be recommendations. The strategy we're using is not meant to be a recommendation of using that particular strategy. We are using a paper money version of Thinkorswim. There are some significant differences in that compared to the real account. We discuss stop losses every time we do this. So be aware of that. There's no guarantee that execution of a stop order will be at or near the stop price. We've seen that happen even in our paper money account. And that definitely happens in the real accounts. And then also remember that all investing involves risk, including loss of principal, and past performance is no guarantee of future results. We have an agenda and a series of lessons that we went over several weeks ago, several months ago now. And these are those 8 lesson series. And what we've been doing the last several weeks is really just kind of building on either this lesson 4, planning your trade and trading your plan. We're going to do some of that today. We've done a lot of managing the portfolio. We've done a lot about position sizing in that. So, we'll restart this series probably, soon. I don't know what that means, but, today we're going to be going over, again, more aspects of managing the portfolio, using some techniques to help us set some new buy orders. If you have not been through these 8 lessons, then I would recommend that you go out and take a look at our Trader Talks page. I'll just chat this link in so you have it. And then scroll down. We have on our home page, if you scroll down about 6 lines or so, you'll see stock investing basics. And this is where all 8 of those lessons are housed. So you can go through those lessons and then come back. And then if you jump over to the playlist page, you can see our playlists of all the webcasts that we have are here on this playlist page. And our stock investing for beginners playlist is right here. If you click on view full playlist, you'll see all of the videos that we've done on demand. You can watch these anytime that you like. So hopefully that's helpful for you. Let me go ahead and go out here to our Thinkorswim platform and just take a look at where we are. We're going to be focusing on our plan 3, which is using that 2 green arrow plan, which is, a 50 period moving average and a stop 1% below the 50 period moving average with a MACD histogram. And these are our open positions right here. We have about 18, I think, if we counted right, or I counted right last time. This column right here called the above 50 SMA. Number one, this column header is in the description. So if you go down in the description, you can add this column header. So you can add it by clicking on the customize columns and then just find it in your list of columns available here. And you can add it over to that side. And I've also got this day MACD green, which means how many days the MACD's have been green. And this just gives us an easy way to sort. If I resort by the ones that are red here, this means that the stock closed below the moving average some time ago. This number doesn't update here, but if it's red, it means the stock's below the moving average. So the very first thing I wanted to do today is to go through our open positions and just manage those based on this simple rule set that we have. All right. And so let's take a look. I've got a watch list put together of our two green arrow holdings, but I wrote down the symbols that had the red arrows on them. And so I want to just go through those on the chart. So I'm going to shrink down this left side so we have some more space. Go here to the chart, and then I'm just going to type in BKR. So BKR is interesting is, we bought it over here when it was trading about $62. Looks like there went up to 67, pulled back really hard over here, and I think we adjusted this stop based on that particular red arrow. And then we got another red arrow today. So this is one, the rules now state to move our stop 3% below the low price today. So let's grab a calculator and just see where this would go. And so I want to go through the mechanics of this with you of, when you're following a set of rules, when you get your signals, you just basically act on those. And then anytime we're dealing with a stop order, I think it makes sense to ask yourself, does the stop make sense or not? Because sometimes there's support levels that are pretty close by that, we may want to adjust that stop up or down a little bit. But let's take a look. So today's low looks like we're at 59.92. And then we multiply that by 0.97, and that tells us where our new stop should go. So a couple things, this is just in general, if you haven't been in the trade very long, with this particular plan, sometimes it takes about 6, 7, 8 weeks or more before the red arrow stop is an adjustment higher than the original stop. So the very first thing that I would do is when you get this number, this is where our stop goes based on the rules, which is 2 red arrows, move the stop below 3% below that low. All right, our current stop now, let me click on this. Our current stop, you can see is at 53.53. And again, our rule says we should move the stop to where? 58.12. So very first off, we could move that stop up about $5, which in and of itself is kind of a cool place to be. So what I like to do next is to draw a line at about 58.12. So I'm going to change my drawing tool over here and just grab this little trend line. And then usually I'll just left click on today and then try to draw basically a horizontal line, doesn't really matter. And then I'll right click on it and edit the properties and then put the real number. Don't bother trying to get the line exactly where you want it when you're trying to draw it, because man, that's frustrating. So just draw it and then you can go in there and edit it. So based on the rule, this is where our stop should be adjusted to. Okay. So the question then would be as well, does that stop make sense? Well, you can see a couple things going on here, right? We had the stock make a higher high and the trend was continuing. My opinion as a technical trader would be as if this low was breached, okay, right there, it was, that would change the short-term trend from bullish to neutral. Okay, this is not uptrending in the short term anymore. We made a little bit lower low, we rallied up, we made a lower high over in here somewhere compared to the previous one. And right now it looks like we're in a little bit of a channel. Would you guys agree with that? If I draw my price level tool on BKR, I would say we probably have some pretty good resistance in that neighborhood, and we have a recent low right there. And so we're in a little bit of a channel right now, and our stop adjustment rule says put the stop there about 58.12, and that's based on today's low price. As a more conservative trader, if you wanted to try to give the stock a little more wiggle room back and forth, you might go 3% below this recent low. And let's draw a line where that would be. So that's 59.18 times 0.97. And so that's at 57.40. So I might do this. I might right click here, duplicate that, and then draw it down a little bit. And again, not worry where I put it and just right click, edit the property. And that was 57.40. And I would put that in both of these boxes. So then it's still a horizontal line at the place that I'm looking for. And so these are kind of where we're looking at this. When we have our rule says to put it here at this stop. A technical trader might look at that last low and say, well, I wanted a little bit below where that old support was, that last recent low was. And really what we're asking ourselves is if I move my stop up to either one of these and it goes and picks me off and stops me out, am I okay with that? And, I don't think anybody likes getting stopped out, but there's been times where we've been stopped out and then the trend just keeps going down and then we're happy that we're out of the trade, right? So I'm going to give you guys the chance here. Which one do we want to do? Do we want to do 58.12, which is still below that recent support by maybe about 2%? Or do we want to go a little bit more looser on our stop and go 57.40? You guys go ahead and type that in while we kind of, think about this, and I'm going to move my stop up. And so in order to do that, as I see those numbers come in, I'm just going to move it up in between those and then wait for you guys to put the number in because we're going to edit this. So I left clicked on that little box and just drove it up, and then it gives me a chance to edit this. And so I'm going to edit this to whatever you guys think. 57.40 from Sharon, 57.40. So that's where, in a more volatile market, I think it makes sense to go 57.40 on the stop. And it could still get picked off, right? It could get, the market could be falling very quickly through there and trigger the stop at 57.40 and then get filled much lower than that, right? We know how that stop works. But that's what I'm going to do. I'm going to put it there, 57.40. We'll send that order off. And then now we're done with our analysis on BKR. All right, let's take a quick look at DD. This is another stock. Now, DD, I was going through an old webcast that I did. I think it was last week or maybe the week before. And I saw that we had a red arrow on the moving average. And I thought, oh, there's the two red arrows. But what do you notice on DD? Do you guys see what's going on here? The MACD is actually still green. So we don't have our two red arrow signal here. This is kind of a rare occurrence where the moving average is now turning red or closing below the 50-period moving average before the MACD actually turns red. You guys see that? So kind of interesting. In this case, we don't have two red arrows, so there's really nothing to do in this case. So we'll just leave this stop where it is until the MACD turns red, and then we'll do our evaluation on that one. All right. So there's a question in here. What would be the outlook for oil price and how might that impact the price trend? And so, well, oil price is going to definitely affect some of the energy stocks. We've actually already seen that. As the market's been rallying, some of the energy stocks have actually come down, and some of the material stocks, which you'll remember about 3 or 4 weeks ago, we started buying a lot of those because the market had gone up. In fact, we have some red arrows on those. So Dave, let me come back around. When we get to ExxonMobil, we'll take a look at one that's definitely involved in that, right? So yeah, I won't be doing a forecast on oil prices, but we have a few stocks that have been impacted because they're in the energy sector. In fact, if I go back to the monitor tab, we can see here we have several BKR, one of those that we just adjusted the stop on because it's in energy, OXY, XOM. We have a few of these that have red arrows on them. So we're going to look at some of those today. All right, let's go on to the next one in the list. This is actually in utilities. This is Consolidated Edison. And we got a red arrow here yesterday, and the MACD was red. So again, this one, we should have done this yesterday, and I would encourage all of you to go through your daily routine. Every single day you're looking at this. Typically for me, I'm just looking at it on Wednesday because this is when we meet, right? So yesterday is probably when we should have done what I'm going to show you today, but we'll do it today just because we're in class today. So what do we do? Well, in our daily routine, we're looking for the stock. We're just watching the right side of our chart. It usually takes just seconds, if that. And I say, do I have two red arrows or not? If the answer is no, then essentially we're done. We don't have to do anything. But in this case, we got two red arrows yesterday, and the rule says again to put the stop 3% below the low price on this day, which is 110.48. So if we grab our calculator, let's just go through that process again. 110.48 times what? 0.97 gives us our stop number, so 107.16. And let's go ahead and go to our drawing tool, and we're going to try to draw a horizontal line. We don't even care where it is because we're going to go in here and edit the property. And what was it? 107.18. I'll double check this. I don't think that's right. So 107.16. Well, I'm not going to change it. It's close enough. So what do you notice right off the bat here? Well, the stop adjustment rule is basically right where our existing stop is. So, I'm not going to move my stop up 3 cents, 4 cents in order to follow that rule that way. It's just usually, and this is another one of those. We recently just bought this a couple weeks ago. There hasn't been much of a trend development. In fact, we've changed from what I would consider a nice uptrend, and now it's really getting very sideways, right? It's getting very sideways in its trend. I might come in here and draw some resistance here at the top. We've got more touch points probably about that neighborhood. So this is how I draw my area of resistance is I'll usually grab the ultimate high and then I'll draw a spot where I have multiple touch points. And that's how some technicians will get that area of resistance, which in my opinion is about 115 to 116 here. Obviously we have a recent low here at 108.48. So this is one where even though the rule says to adjust the stop, we just haven't seen enough trend development here after our point of purchase to worry about adjusting the stop. We'll leave that stop where it is. If we get knocked out of the trade, so be it. We'll have a small acceptable loss and we say welcome to the market and we just move on. All right. So that's taking a look at ED. Let's take a look at NEE. This is another energy one. NEE is actually more utilities. And NEE, very similar. We got a red arrow yesterday, another red arrow on the MACD. So those red arrows lined up exactly. This stock's been trading very sideways. We actually bought this one about a month ago. And so we're just going through the mechanics. That's our goal today, is just to go through these mechanics of, monitoring and managing our open positions and just getting that routine down. So the low today is 90.58. Let's jump over here into our calculator. 90.58 times 0.97. That tells us where our stop can be adjusted to. So 87.86. Let's go up to our drawing tools. Let's draw a line there, 87.86. We'll just put it right there. Right click, edit properties. 87.86. Make this the same number. And then click OK. That's where the stop should go based on the rules. This is where our stop is based on our entry price rule. It looks like, before we adjust it, we want to say, does that stop make sense? Looks like we've got some decent support in this area. That stop would be below that. Again, if you wanted to be a little more conservative, you might go 3% below that last low, 89.17, instead of having it here at 87, which is, what's that, about 1% lower, so 0.5%, something like that. So again, you could run the numbers and see. I'm going to go ahead and move my stop up to this one here, the 87, 86. So we're going to right click left click on this, drag it up, get it close, and then hit edit. And we actually missed it by 2 cents. So stop order, good till canceled, hit confirm and send. Recognize the stop is just a trigger point, could be filled lower than that, send that order off, and now we've done our daily routine managing our NEE position. And sure, hopefully this stock starts to trend back up again. But if it doesn't and knocks us out of the trade, again, we get knocked out with a small acceptable loss, and we're able to take the next buy signals that come around. All right, we've got a couple more to manage, and then we'll take a look at some new positions. All right, so here, WMB Williams. All right, so these guys gave us some red arrows. Now this one we bought over here. Looks like we're probably not making a lot of money on this one. WMB, we're actually down $1.75 on that position. Let's take a look again at the rule, right? So our red arrow rule, now this is an interesting one because we got a red arrow on the MACD weeks and weeks ago, and we didn't do anything. There's just nothing to do. Every single day we just wait. A couple days it traded below the moving average. So during the day we saw a red arrow and then it closed back above and the red arrow was gone. 2 days ago we actually closed below the moving average. That generates that red arrow, and now that's when our rule kicks in. And the rule says to put the stop 3% below 71.03. Okay, so let's again take our calculator. 71.03 times 0.97, and our stop should go to 68.89. So I like to take my drawing tool, 68.89. Ooh, that's pretty close. 68.89. And our rule says to move the stop up there. Does that stop make sense? Well, it's below all of these recent lows. And really, we have to go back even before we bought it to see a low that's kind of lower than that. So I think in this case, it makes sense. It makes sense to move that stop up. Let's go ahead and put it there. That's again at 68.89, right? Or left click on that, drag it up, 68.89. Ooh, man, that's almost right on. Missed it by a penny. Hit confirm and send. And now we've adjusted that stop. And that one to me, like looking at it, feels a little bit close, but again, if the institutions, which is one of the things that may be happening, I'm not guaranteeing this, but one of the things that may be happening is we may be seeing a rotation of money again. Remember about 3 months ago, we started seeing those energy stocks really taking off, right? And materials and industrials were coming in. There's been a little bit of a switch there. In fact, let me go over on my gadget real quick here. Energies is still outperforming the last 3 months, but not nearly as big as they were. So we've seen a pullback in energy. Utilities was not up in the top three. Real estate was not in the top three. Materials and industrials were in the top three, and now they're 4 and 5. So we're starting to see, and information technology was way down at the bottom, and now they're positive. So we are starting to see a little bit of rotation out of some of those outperforming sectors and maybe into some of these other sectors that weren't quite as performing. So there might be some opportunities in some of these other sectors. In fact, one of the examples I'm looking at is going to be an information technology that I want to review before we're done today. All right, so there's looking at WNB. We moved that stop. Walmart here was another one that had the red arrows. Got a red arrow on the MACD today. We've talked about this many times in our webcast over the last several months, but this trend really hasn't changed a whole lot since we got that first stop adjustment. It's been red and green and red and green, red and green. So usually when I see something like this and there's just been a lot of sideways price action after our first red arrow or first set of red arrows here that happened back on the 18th, it's just chopping around. And I don't know if I want to move my stop up there. Theoretically, I guess, today's the second red arrow, so we'd look at the low price. Now, this one has a nuance here that we haven't seen yet, so I do want to address this real quick. But do you see that the red arrow, the way the rule is written is we put the stop 3% below the low price on that second red arrow day. Now, usually that's the moving average is the second one to go red. But this one has one of those little nuances that we haven't run into yet. So I want to address this. We have two red arrows, but the lowest price is during the formation of these two red arrows, right? And that low price was actually yesterday. So again, if you're trying to implement this rule with the idea that the stop is meant to get us out if and when the trend changes, then most technical traders, most investors would probably use the low price yesterday, even though the MACD was still green there because that low yesterday was lower than today's low. So it's kind of the low day idea when you get those red arrows. So that low yesterday was at 122.55. Let's again see where our stop would go based on the rule. Again, a little bit of a modification here because of the low price being yesterday, 118.87. And you can see that would be up in there. I'm going to grab this line here and we're going to activate it. And we're going to move that over here just to kind of indicate where the rule says to put it. And what was that? 118? Yeah, 118.87. So this is where the rule says to put the stop right there. We have an old support level, at 117. Our last low, if we draw that one in, is at that level. So this stop may make sense to move it. Walmart's one of those that we've been in this one a while. Let's take a look at our monitor tab. Walmart's right here. We've been in this one quite a long time. We've got a pretty nice return at 18% on this stock. And so, there's some choices again that come up as you've been in a trade for a long time. Are we okay putting a higher stop or a little bit closer stop to maybe capture a little bit more of the potential profit on the trade? Or do we want to maintain a looser stop as the stock's been kind of chopping around sideways and maybe keep the stop down below 117.45? And there isn't really a right or wrong answer here. I think either answer is fine. Our current low is there at 121, so I think this stop makes sense based on those rules that we've talked about. If someone wanted to have a little bit looser stop on something like that, that's fine. Some people might even say, well, my current stop's at 113.92. My price point on this is like 105, so I've already got a stop that essentially, barring some big gap down, if I got stopped out at this current stop, we'd have a profitable trade. And so there's some choices there that you have to, kind of think about as you're managing your rules. If you just follow the rules, the stop would go here. And so I think I'm going to go ahead and move that stop up to this 118.87 line, partly because we've been in the trade for so long, partly because that current low's right there at 121. And so if we keep going down here, that may indicate a trend change, and I don't want to be in it anymore in our example portfolio here. So those are the reasons behind maybe adjusting the stop and some things to consider as you're looking at adjusting your stop. And I think that hit that right on the nose, didn't it? 118.78, isn't that where it was? Oh, 87, a little dyslexic there. 118.87. So we'll adjust that stop there and, still below the current supports short-term low, right near the previous one, but also locks in about $5 more of profit if we get stopped out near that, which is not a guarantee. All right. Last one here on my review, and then we'll put some new trades on. ExxonMobil. So ExxonMobil, and this is kind of back to Dave's question. Dave asked about how oil prices might affect some of the stocks. Well, I think here's one, ExxonMobil definitely impacted over the last couple of weeks. In fact, that's almost exactly opposite movement from what we've seen like on the S&P 500, right? S&P 500, when was the low? 30th of March, right? 30th of March. Go back to ExxonMobil, the high 30th of March. So as the markets rallied, and this might be correlation, it might be you know there might be some other ways to describe this, but what I find interesting is that the energy stock that's in our portfolio topped out the same time the market bottomed out. And so we've seen a pullback here. ExxonMobil we got in over here not too long ago. The rule says to put the stop 3% below the low on this particular day. That's our second red arrow day, 151.92. Let's take a look at that. 151.92 times 0.97. So that's 147.36. And the low yesterday was 146. So if we moved our stop up when we were supposed to and to the level at which the rules stated, we would have been stopped out. We obviously can see there's some lows about 147.70, 145. I think we would have seen those on that day a few days ago. We may have said, well, we'll put our stop 3% below 147.70 or 145.15 and avoided getting knocked out at 147 and change. So let's take a look for this example, partly because I didn't do this a couple days ago. Usually I wait till our class on Wednesdays to make these adjustments. But let's take this 147.70 low, and let's put our stop 3% below that. Let's see where that goes. 147.70 times 0.97. And that's 286. That can't be right. Let me clear this out. So what do we have? 147.7 divided by, no, I don't want to divide by. Sorry about that. Getting late in the day. Times 0.97. So 143.26. Let's go ahead and move it up to there. 143.26. We'll edit it, put it where we want it. 143.26. Confirm and send. Send that off. And that stops down below those lows. If it keeps pulling back, we're going to get knocked out of the trade. So, and that stop looks like it's about a break-even trade, maybe a little bit above our purchase price there. So barring a big gap down or something, we probably get stopped out about break-even if it keeps going down. So ExxonMobil, yeah, just a small gain on that one right now. All right. So those are the ones that I wanted to go over as far as managing our positions. Looking through here, just seeing if there's some questions. Looks like there's some good comments in there, so appreciate that. Appreciate everybody helping each other out. Now the fun part. Look, so last week, if you remember, we did over the last 3 or 4 weeks, we've been talking about AI stocks, right? We did Marvell. Let's take a quick look at that one. Now Marvell hit our target here, and it went up another couple dollars. Do you hate that? I hate that. But that was our plan. So one of the things I want to talk about on Marvell and the one we're going to purchase here today is another alternative that you could have. And so you have to evaluate this for yourself when you're looking at your own rule set. And one of the things I found very helpful is to have some rules to start with. That two green arrow, 50-day moving average, and MACD plan that I've been going over all day today, that's a really good starting point. But most people are going to modify those rules a little bit, maybe adjust the entry, adjust the stops, adjust how they get in, adjust an exit target like we added with Marvell. But one of the things that you could do, or we could have done on Marvell, and this is for someone who wants to stay in a trend trade longer rather than sell the whole position like we did here when we hit our target, is you could have scaled out. We scaled in and we could have said, well, we're going to sell half the position here at our target and then let the other half run, and we'll just continue to trade those two green arrow rules on that. Does that make sense? So Jay Richardson saying, don't kick yourself for following your plan. Yeah. Another really great quote is like, if you set a target on something, any price above that, it's not your money. That took me a long time to get that one. So, but I do want to go back. When we set this trade up and we had that target at 126 and the stock was down there about 190, how many of you thought there's just no way that's going to hit that? Just no way, right? It just feels like it's far away, but bam, went up and hit it nicely. Did the bounce, ran up there. I mean, almost straight up to it. But anything above 126, that's not our money in this particular trade. All right. Now, this is another important part. If you don't get anything else out of our session today, write this down in your notes somewhere. Now, our job on Marvell is, if this stock still meets our buy rules, is that we want to look for maybe the next buy signal. Right now, we're currently in a valid entry signal still. This is still a valid entry point because the MACD is still green. But some traders would wait for that to, probably turn red, maybe for the stock to settle into a consolidation a little bit before buying in again. But, what I don't want to hear from anybody is 6 months from now is like, well, I owned Marvell when it was at $190 or $100, but I sold it and then didn't get in it, and it's trading at 200. Well, between now and 200, there's probably going to be some buy signals. So if Marvell still fits your buy signal list or your rules, then you just watch it for the next buy signal opportunity, whatever that is for you. All right, make sense? All right, let's go to the fun one. Oh, this is well, this was the fun one for me. Remember this one? We did this one last week. So we bought this on the breakout, right? I set a limit order on the green candle. We got filled on what is called a shooting star candle here on the 9th. And then I drew some boxes. You guys remember that? I drew these little gray boxes in indicating what I wanted to have happen. Because why? Because we have a limit order to buy on the pullback, right? But this is one of the reasons that people buy breakouts, honestly, is sometimes it doesn't pull back. I mean, this one really just went sideways and now we're up 240. and that's up $10. What's that? 5%? That's up 5% from the last candle over here, more or less. If I did my math right, it is late in the day, so maybe check that. So the closing price there to closing price here. Okay, that was a little aggressive. 2.5%. So it's up 2.5%, almost 3% from the closing price of that day we got in. But sometimes it doesn't pull back. It just keeps going. So, I'm going to erase my little boxes here. Let's remove drawing. But I found this, enjoyable, number one, and kind of fun to do when I was first getting started in my trading and investing, is if I looked at a stock and I thought to myself, well, what might happen? And if we saw a shooting star, that's a bearish reversal candle pattern. It would not be unusual for the stock to pull back. In fact, we talked about that, right? We talked about stocks that break out oftentimes, about 7 times out of 10, will come back and test some of those areas as potential support. Now, what's interesting to me on this one, let me hide my volume on here so we have a little more space. But check this out. If I take a look at that big green candle, Barb's got a great class, getting started with technical analysis, and she'll teach you this. But one of the things that candle theorists believe is that about halfway through, a big green or red candle might be what? Support or resistance. And it looks like we are pretty dang close. I was trying to eyeball halfway through here, not where I saw that low, but it looks like we were pretty dang close to pulling back halfway through. And we actually, in some of our examples, that was one of our entry points, right? We put an order at the halfway through the candle point. We just went pretty low on ours down here. And so I'm going to cancel our existing order there. We're just not going to probably see it pull back there. And at this point, if it does, I don't know if I want to add anyway. Okay. So, but that was kind of fun looking at BWXT. I want to do an example trade on AMD. Now, this is one that's in that sector again. This is information technology. These guys were consolidating a lot. The MACD, or the moving average here, technically is up about 21 cents. So that meets our rising green moving average. The MACD is green. The stock is above the moving average, so that's green. This feels like we're really late to the dance again, right? We could have bought it based on a breakout here. This was not, because the moving average was still falling at that point. It doesn't meet our green arrow rule, but that's definitely a breakout trade. That closed above resistance. That's a valid entry point. So if some of you went in on that day, kudos to you. I think that was a valid entry for a breakout signal. We did not get a pullback. How many of you actually saw AMD break out and thought, whoa, okay, I'm ready for that thing to pull back to 225, 226. I'll buy it when it does that. And here we are, 258. Since I was so far off on my prediction last time, how far above that closing price is that one? That's 11.2% in about 6 days, 7 days. And that's some breakout trades, right? But here's the fun part. Here's what I wanted to show you. This is the new technique. We haven't ever done this before in our class. But I want to place an order to buy just because we have our 2 green arrows. We're late, no question. It's a late entry signal. But I want to go in there with half of our position, which is about $500. This half of 500 be 1 share. So we're going to set 1 share, and this is just going to feel awful. Our initial stop's going to be way down there at 207.75. Why? Well, because that's what the rule is. So 1% below the moving average, 207.75. So let's go in there, right click, buy custom with stop. And we're just going to go in there at the closing price. We'll go 258.12. And then our stop, we said, was way down there, 207.75. And we'll make both of those good till canceled. We'll go with 1 share here, and we're going to send this order off for tomorrow. That'll be a limit order. And we'll put that in our 2 green arrow group here. Send that off. And now this is the trick I want to show. We're going to go up here to the drawing tools, And this one, it's a little tough to see. We don't have a big green candle. We don't have, you know, like a line from the past back here that might be support. So we're going to use the Fibonacci retracement tool, which is this one that has the percent on it. And this is how you do this. To see a potential pullback area at which we're going to set a limit order to buy one more share of this stock if it pulls back is we're going to draw from the bottom shadow. This is not the only way to do this. This is just how some technicians will do it. They'll take the lowest low in this rally. They'll left click down there, draw up to the highest high in the rally, and then they'll take a look. 23.6%, if the trends are really strong, that may be all the pullback that we see. 38.2 is a very common one. That's the one we're going to use for our trigger price here. And then 50%, check it out. Happens so often. That 50% level's right at an old resistance level. So, 38 and 50 are more common areas to look for. Really, really strong uptrends. We may only get a pullback to 23.6, but we're going to go in there with a 233.19 entry price. Okay, right click. Oops, I'm not edit properties. Do a right click, buy custom with stop. And that retracement level, where was it? 233.19. So we're going to put an order in there. And then we'll use that same stop as before. What was it? 207 and change. Can't see it anymore. Yeah, 207.75. Day order. Good till canceled. Good till canceled. One more share. Confirm and send. And so this one, we're trying to get that 38% retracement pullback. If and when that order fills, it'll activate the stop at the same place the other stop is. We'll put this in our green arrow group, send that order off. Now I've got kind of two orders sitting on AMD. All right. So hopefully TX says they just learned something new. Hopefully some of you learned quite a few things actually about that, as we wrap up today. Number one, how to draw the fibs, how to look for retracement levels, which ones are the more common levels. If you're strong trends, maybe kind of alternative levels to look at. They're at 23.6 on the retracement. We monitored our open positions. We made some stop adjustments on our open positions over here. We placed some new trades based on our rules. We went through some of those daily routines. And again, I would just encourage you to, if you haven't watched already, go watch some of our old videos here, and particularly just if you haven't gone through those 8 lessons, go to the home page and check those out. This will give you a good foundation, especially if you're new to investing. Encourage your kids, your grandkids, if they're coming out of college, and they're looking for an opportunity to start investing. Man, I wish somebody drilled that into my head when I was in my 20s. Boy, that'd been great. So, if you have some 20 somethings in your family, some younger than 20 somethings or even older than 20 somethings, share the investing knowledge with them. So have a great day, everybody. And good luck in your investing. We'll see you.